This gold explorer has got one of the lowest AISCs we've ever seen. You gotta hear this story. Hello and welcome to Crux Investor. And for those of you new to Crux Investor, or if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. Today we talked to Darren Klinck. He's the CEO of Bluestone Resources. They're a Guatemalan gold explorer. We talked to Darren about funding and cash flow, liquidity and the need for it for junior companies, board directors remuneration, and also junior market strategy. So if you're interested in any of those topics, go to the description below, click on the relevant time link, and it will take you to that part of the video. But in the meantime, let's hear what Darren had to say. Hi Darren, how are you, sir?
Very well, great to be here today.
Yeah, fantastic. It's good to have you on. We've had a couple of goes at it, but we finally managed to track you down. You're jet setting around the world. Dan, why don't we kick off? Do the 1 minute summary on the business, and then we'll get stuck into some questions.
Sure. So Bluestone Resources, we're listed on both the Toronto Stock Exchange Venture as well as on the OTC. But our primary focus is on the Cerro Blanco project in the southeastern part of Guatemala. We acquired this asset 2 years ago. Bluestone at that point, in fact, was really not much more than a shell company with $35 in the bank and one unpaid employee. And today, 2 years on, we're right in the midst of putting the project financing package together to really kick off development and construction activities on what is one of the world's highest grade undeveloped gold projects out there. It's had more than $200 million invested in it previously by Goldcorp, and prior to that, Glamis. It's high grade, and the feasibility study, which we delivered earlier this year, demonstrated that it would produce gold 130 to 150,000 ounces over the first 3 years at less than $600 an ounce all-in sustaining costs. So great margins, great project, really advanced, obviously, and it'll be one of the the next sort of projects on the development pipeline here over the next couple of years.
Yeah, I mean, sounds good. Just want to sort of talk about a few of the things which are going to stick out for me that I'd like to understand more about. So let's start with Guatemala first of all, as a mining jurisdiction. Tell us a bit about that.
Sure. My past experience, I spent 10 years with Oceana Gold, so worked in places like the Philippines and other parts of Southeast Asia, and no doubt, Guatemala is a developing country. Most people don't realize, in fact, that Guatemala has had probably the most stable currency in Latin America in the last 10 years. And people kind of stop and say, well, why is that? Well, they have such a strong fiscal policy. They're not running big deficits. The economy's been growing at 2 to 4% per annum. Harvard Business School recently pegged it as being one of the 15 fastest growing economies over the next 15 years in the world. And so from that perspective, it has a very good foundation, very strong links with the United States. It is a right of center, pro-business country. There's a lot of foreign investment, particularly out of Canada and the US, that does come into Guatemala. And so from that perspective, kind of comparing it up to other jurisdictions where I've been involved with before in developing countries, I've been quite honestly positively surprised. What we've done here over the last sort of 18 to 20 months is we've had a number of folks that have come down and visited, shareholders, analysts, and of course now we're right in the midst of the project finance. So you've got project banks, the commercial banks, many of which are out of Europe, and some of the IFIs as well. And almost, unequivocally, folks come down with the perception, which I did as well, honestly, when I first went down there in April of 2017, having even the fact that I'd spent a fair bit of time in and out of places like El Salvador. My wife's family is from Mexico, so familiar with Latin America, and come away with a very positive feeling, not only in terms of the project and where it's located, infrastructure to get there, but also the system, the fact that, in Guatemala, there's a set of rules, there's a mining act, we're held to account, and it works. So we're very excited about the project. No doubt, in this business, whether you're in British Columbia, Nevada, Queensland, or Guatemala, always plenty of bumps on the road, and that's unequivocally, we'll have that as well. But I've been very happy so far.
So what are people struggling to understand about your company? Because if I look at your market cap, I mean, until the gold price moved, it was sitting around $50 million. It's up at around 80 today. What do you think people are not getting to grips with? I mean, you've got gold and you've got geothermal. story there. You've had a lot
Unique.
of that. You mean that I'd love to understand that a bit. You've got a lot of money being spent on this by Goldcorp previously, and you picked it up. We'll get into the numbers in a second. You've obviously picked it up for a reasonable sum, but your AISC is really low. I mean, really low. It's not just sub $600. It's getting down. Getting much lower than that. There's a lot to like about it. So what's the problem?
Well, I mean, I don't necessarily know there's a problem. I think that no doubt we, since we got involved previously, Tahoe with our Escobal project had a challenge, and it was in the courts really around the ILO 169 consultation, and the outcome of that as it moved through the courts was fine until it got to the Constitutional Court and they reversed the decision. And so that's ultimately been a big speaking point. Less so today, to be honest, because I think as investors have actually come down and had a look themselves, they've come away and been much more comfortable that it's kind of a bit of an apples to oranges comparison. We're 3 hours down the Pan American Highway, and largely in an agrarian sort of farming community that is Latino. And in fact, as I said, we've had some of the recent IFIs, the corporate commercial banks, and all their independent engineers and independent E&S folks, environmental and social, come down and visit the project as well, and really give us some very strong.
I get that.
I think that's probably part of it. There's no doubt.
Yeah.
In terms of the overhang, but nonetheless, as well, of course, we're a company that, as I often affectionately say, when you think about the definition of risk in the mining dictionary, well, guess what? I mean, Bluestone's one of those. We've got a project that we've got to finance, we got to build it, we got to commission it, we got to bring it on, and it's our only project, right? So from a risk reward perspective, there's huge reward here. But if we look back over the last sort of 1 to 2 years, really, I think the investors that have been focused on, say, precious metals have been more kind of gravitating to the cash flow stories, the ones that are actually producing. And that's very typical. So as things sort of continue to move on here, things will gravitate down into developers, and there's just not many high-grade gold projects that are coming down the pipeline in the next 2 years.
Yeah, but you've definitely got high grade. The grades are good, around just over 10 grams per ton. I say we talk about the AISC. I think it should be talked about. It's one of the lowest we've seen. I've only seen Gran Colombia come in lower, but your share price isn't reacting to all of these positive, components. It really hasn't. If anything, if it wasn't for the bump in gold, I'm not sure where it would be today. So again, I come back to that. You've identified a few things that you see as the cause for that, but what have you been doing about that in terms of getting out there? You've got some investors have come in and they think the country's great and the project's great, but the rest of the market, you can't expect everyone to turn up. So what are you going to do about telling that story?
Sure. Well, I think when you look at our shareholder register, arguably we've got one of the stronger registers out there for a junior company. I mean, the Lundin family sits on 35% of the company. The Lundin family over the last number of decades have made a fortune on investing in high quality projects that are going to be mines, first and foremost. And as you work down the list through CD Capital and many other institutions, whether they be in Europe and North America, I think, you have to be patient. Things don't happen exactly like that. I think, as an indication of the quality of this project, when we think back here only a few months ago in February, when nobody was actually talking about or thinking about precious metals, we went to the marketplace and we had a $10 million bought deal financing that allow us to continue here, obviously, with the technical work. As we move through the project financing, we came away with 22. Up until here, call it 2 or 3 months ago, that was the largest bought deal, or one of the largest bought deals in the junior mining space, full stop, throughout Canada. And so for a project that, yes, obviously we're in the development curve, I think it has had very good response. And so we'll keep working at it. My experience is that, these things don't happen overnight. And we've got a great project that's advanced. It's had a lot of capital invested in it. The numbers speak for themselves. At today's gold price, this thing has, a 50% IRR and will pay itself back in a year and a half. And that's why those commercial banks and those large sort of tend to be more conservative institutions we're engaging with right now and have had very good feedback around this project finance.
Are they worried about the life of mine? I mean, it's 8-year life of mine. That's pretty short, right?
Low sulfidation epithermal systems. I don't know what your experience is, but I have a recent experience when I was with Oceana. We acquired the Wahi mine from Newmont. That mine originally was developed in 1988 with an 8-year mine life. This year, year 31. They've just permitted for another 10 years. This mine will be operating for 15 years from now. It's a gold and quartz veins. We're actually expanding that right now. So we kicked off a program in December to move inferred material into measured and indicated through infill, and you'll see in the results that we've been putting out every 3 to 4 weeks that we're getting some great results. And really, more importantly, it's firming up our confidence in the geologic model. And we're finding that these veins that are in inferred, in fact, we've got veins that are currently got the grades or grade and widths that are in some cases further down in the ore body that we're now drilling out up higher. And moving inferred into indicated. So we know that they're mineable because they're currently in the mine plan. So it's going to grow, but not atypical at all for a vein type system to have 8 or 10 years in front of it, as opposed to a porphyry where you can, drill out 30 years in a hurry.
Right. Okay, understood. So you've got a lot of institutional money in there, and do you think that's the problem? Because the institutional money, they're not trading.
Well, I mean, if you look at the liquidity. When you run down through the Lundin family, CD Capital, management, Goldcorp's position, which of course is now Newmont, just in those 4 baskets, you have roughly 65% of the stock. And then when you add on the institutional, kind of holders, obviously, and you start getting chunky 3 and 4% positions, no doubt, a lot of that's actually sitting tight, and guys that have come in and made an investment last year or this year or even 18 months ago are not here to trade it. They're here to see this mine financed and brought on and generating more free cash flow in the first year of annual production than the market cap today.
Yes.
So that is a driver. We are spending more and more time, though, definitely on family offices, retail brokers, that sort of thing. And believe it or not, our trading liquidity today is much better than it was 24 months ago on the back of that. But it takes time, for sure.
Okay, and so where are you having these conversations? You mentioned Europe a second ago, so it sounds like you're trotting around the world.
Well, I mean, I haven't been through Europe in a few months, but we've got a number of followers in Northern Europe, in places like Liechtenstein and Switzerland and Norway and Sweden, but also in the Middle East, also in California, also in, obviously in small towns here in British Columbia as well. So, no, I mean, we're trying to maintain a top of mind focus. There's no doubt. I think the project itself actually, kind of matches up very well, obviously, from an economics perspective, from the advanced nature, the fact that if we had the project financing in place today, we'd be building a mine. We have our approvals in order to do that.
So let's talk about the project finance, for instance. And I know you're in it's a kind of, I call it a very boring phase. You've got your PFS, you're waiting to work out how you structure your finance. So there's a lot of waiting around. So where are you with that? What can you tell us?
Yeah, it's probably going back to your earlier point as well around, okay, so the market and respond. I mean, you're exactly right? I mean, we're obviously a little bit like a duck on water, right? I mean, the duck doesn't appear to be moving, but the feet underneath are really obviously paddling. So we kicked off the process in April. And we're really we're kind of running through the process with quite a wide range of groups. I mean, from your private equity type shops that are of course very active in the financing over the last 2 to 3 years in the metals and mineral space, and then your more traditional commercial banks, your international financial institutions, as well as export credit agencies, and then having discussions as well with some of the streaming groups as well. And I can't tell you right now as to how the alchemy is going to kind of all come together. What we've done is here over the last call it 8 weeks, we've had independent engineering groups come down really as part of that independent engineering review process of the asset on behalf of the banks, and then also the environmental and social reviews and teams come down and really kind of understand the project and the communities and the dynamic with government, etc. And very pleased in terms of how that's gone. I was down in Guatemala here 3 times in the last 2.5 months for those visits, and I going back to my earlier point, I think that perception often is one thing when we come to visit countries, I had the same thing, and people come away and say, "Wow, okay, this wasn't what I was expecting." So I'm very confident. I mean, our timeline, we've stated to the market, we're hopeful to have the financing in place by the end of the year. I think there's a possibility, depending on which route we go, it may trickle into the first quarter, but we'll be looking to have some sort of tranche of financing in place before then, so we can actually get going on the construction.
Okay, can I ask you about that? Because I'm always interested in how the management team think and they behave. So you're suggesting to me that you've got the choice as to what type of money you're going to take, right? You're saying people are liking what they're hearing, and you're talking to multiple types of money. And I always say money's money. It's a question of what it's going to cost you and the terms that you're held to, right? So you're telling me you've got choice. How are you guys thinking about this? You've mentioned royalty streaming in there as well. So you've got lots of optionality, but what are you looking for? Is it just literally how much the cheapest money we can get, or is there more to it?
Yeah, no, I mean, that's obviously a huge consideration, but everything comes with a cost, right? And so while your overall cost may be lower on a sort of the term sheet, there may be other considerations in terms of how that's actually paid back, the tenor, of course, and other sort of restrictions in terms of how we actually manage the construction and our cash flows. And so, from our perspective, I think I've said really at the very get-go, I mean, I want, the best cost of capital with the best execution on the other side and the most flexibility. And on the other side of the table from a financing group, of course, they want, the best return that they can get with the best execution as well. And they're obviously investing in the management team and our ability to execute and deliver on this and then pay back the investment. Okay. And so, so I think from our perspective, again, don't know what the alchemy is going to look like. We think that because of the returns and obviously the margins and what we're hearing from the banking partners, the ability to have a fair amount of leverage here is good, because right now, as I said, at today's gold price, this asset pays itself back in less than 2 years. But we'll see. We'll see how everything kind of matches up.
So if I look at some of your production figures here, you're skewing it heavily towards the first 3 years. I'm imagining that's because of what you say about this type of ore body. You think you'll be able to run this thing for 15 years, not just the 8 years life of mine that currently stated. So have you done that based on the mining, or have you done that based on the need to impress the financiers?
Sure. No, to be honest, it's a natural way to progress with regards to when you're doing your development. So when you run in our case, it's underground, so your stope optimizer, and you put all your cost model and everything in, I mean, the model itself is going to want to drive for grade. And if it drives for grade, it means you got higher grade areas and the same amount of tons of rock. It means your production profile comes forward. That obviously helps the overall economics as well when you look at it from an NPV or an IRR perspective. And so that's what you're really seeing there, is that some of the mining up front is actually pulling out higher grade stopes, which is really driving some of that production numbers up front. We're quite confident that as we continue, and we're doing this now over the last six months, as we continue to upgrade resources from inferred into indicated, they will work their way into the mine plan, and you'll see that production profile then continue to stretch out.
Okay. Well, I'd love to see how that does develop. Again, something you mentioned earlier, the board of directors. You've got some big names on there, not least of all the sort of Lundin family. I know William, Leo, are they all full-time? They can't be. They're advisory, are they?
Well, I mean, as a board member, I mean, most of these guys have got other things that they're focused on. Yeah. But we have fairly good and robust discussions. I mean, for the most part, we're getting together every 3 months. Yeah. Sometimes less than that. And yeah, I mean, we're very fortunate to have, and I think more importantly, quite a diverse range of experiences, because for a company such as ourselves, it's moving really forward through that feasibility, financing, then ultimately construction, development, and then into operations. Like, many regards, those are almost two entirely different businesses, right? From the start to the finish. And so, I have a lot of experience on moving through that with OceanaGold as we built and operated our own mines, in Southeast Asia and the United States, as well as in New Zealand. And when you look at our board, quite a range of experience has been very helpful so far. And I think the other thing that's really important to point out as well, one of the things that we did when we kicked off this project, and I had this discussion with John Robbins, our chairman, before I joined, was we established a technical advisory committee, and that committee, we've had so much good feedback on it. That TAC, as we referred to it, really acted as a peer review over the feasibility study. And these guys are some of the most well-recognized individuals in their space, whether it be underground mining, resource estimation, water and hydrology, processing, mine building, at geotech, for example. And we've had a lot of good feedback on that, because you rarely, in fact, most of the comments we've had, you rarely see a junior company go through that effort to do it. But from my perspective, it was so important because we don't have floors full of people that we can call on for technical expertise. And as we worked through that feasibility study, it was important that we were asking the right questions, and that group will kind of continue to act as a sounding board as we work through the project.
So how do you remunerate these guys? You've got 7 people on the board. That's a lot of people for, as you say, a junior. I appreciate your 80 million market cap now, but that's only a recent thing. So how do you remunerate these guys? What do they expect from you?
Sure. So from, I guess, kind of splitting it up, the TAC, the Technical Advisory Committee, are non-board
6
members. And solely really as a sounding board. And so that's really just ad hoc on a per hour basis. So not a huge cost at all. And in fact, I tell you that these are cheap dollars compared to building something that doesn't work on the back end. And there's plenty of experiences on that. So it's important not to step in the same bear traps that in many cases have been stepped in, over the last 10 or 20 or 30 years in our industry. From the board perspective, it's very, very similar to what any other sort of junior company. It's a small stipend, per board member. And then for, those that chair a committee, for example, the audit committee or the technical committee, for example, they would get a few $1,000s more per year. But it's not a big cost by any means. And at the end of the day, I mean, you kind of get involved in this space because you like the people that are around you, and you're excited about the prospects to oversee value for shareholders.
Not always. I've seen some fantastic salaries, and the word stipend wouldn't be applied. So
well, not on the board, and you can look up our filings.
Oh yeah, it's all public information for sure. And I always encourage people
doing this to get rich.
That's exactly why they're doing it, isn't it?
Sorry.
No, not in this case. Okay. Can we talk about some of the numbers? So, if I look at the, you're talking about all this free cash flow, and I think you did say it earlier, and I think it's worth saying again. You generate more free cash flow than the current market cap in the first year of production. So, you guys are going to throw off cash. The goal, I see it, is to extend the mine life. And you believe that you're going to be able to do this, but how much money are you spending in total getting this thing into production? You've got about between sustaining and initial capital, you've got about 340 million. I mean, what other monies are involved?
Sure. Well, the initial capital, the sustaining capital that you see there is predominantly going to be underground development, right? I mean, so the objective here is to get the underground development to a position by the time the plant turns on that you're presenting ore out of stopes and you're mining stopes.
Yeah.
So that initial capital number is about $200 million. The plant itself is fairly modest. It's $50 to $60 million, and so it's a small plant, and it's a small plant. It's a small footprint. I often say you could fit this mine into a Walmart parking lot, quite frankly.
Right.
Not what we envision in terms of mines today. And so, there's a significant chunk there, obviously, on developing the underground. We already have 3.5 kilometers of underground tunnels, primary development. But that needs to be expanded. Of course, you need to then start doing the work on the veins and opening up the veins.
And you come back. I mean, we haven't talked about that enough. You've inherited a lot of infrastructure, right? A lot of tunnels, etc. A lot of work has gone into this. What was the number? 200?
Yeah, about 200 million, more than 200 million, in fact. About 180 million went into, or 160 million, I guess, probably closer to 180 million now, into the gold project. And then the geothermal project as well had another, call it 60 or 70 million dollars invested in it.
So let's stick with gold for now. So of the 160 million, what was that spent on, and what's usable for you today?
Sure. For those of your viewers, just so they understand, I mean, this project has been around for, call it, 15 years. Glamis was actually the one that did the majority of the early work after Mar West made the discovery. And so when we arrived, there was 125,000 meters of drilling. There was 3 to 3.5 kilometers of underground development that was done down into the ore body. There was a water treatment plant. You had all sorts of surface facilities as well, generators, et cetera, to generate power.
Right.
And then of course the feasibility studies and all the technical work that's gone in alongside that. Now, being honest, when we think about that, call it 160, 170 million dollars that have been sunk into the project to date. How much of that was money good? I don't know, maybe 120, something like that, because there was a 4.5-year period of time where the project was put on care and maintenance.
Yeah.
And so when we arrived, like really there hadn't been much happening there. There hadn't been geologists on the project for almost 5 years.
Yeah.
And the background to that, and most people kind of then ask the question, well, how did you acquire something that had more than $200 million invested in it for 18 million bucks? It doesn't really make sense. And you're right. I mean, it kind of doesn't make sense. But what happened there is that Goldcorp, when Goldcorp acquired Glamis' primary business was in the Americas, right? Central America, Honduras, Guatemala, then later in Mexico. And at Goldcorp, they had been running the Marlin mine in Guatemala, first quartile producer, producing 250,000 ounces a year. And the whole sort of premise was that the Cerro Blanco was the next development project that as Marlin continued to add mine life and extend its mine life, producing 250,000 ounces, you could produce 150,000 ounces from Cerro Blanco. You'd have 400,000 ounces from Guatemala, first quartile costs. And so in 2010, 2011, when the push was on for growth, there was a decision made within Goldcorp to just start the underground decline, get down into the ore body, and fast track that asset to be complementary with Marlin. But then, of course, 2013 happened. Gold price goes down. And I think what you probably saw there was, companies were looking, well, how can we trim our capital? How can we pull back in terms of the cash that's going out the door? And so the project then at that point was put on care and maintenance. They were focusing on trying to extend the mine life at Marlin, which is 11 hours away by car in Guatemala. And while they were successful in adding a couple of years, not substantially. And so when the new management team came in, effectively in 2016, I think it was, they made a decision, 2015, I guess, 2015, 16, they made a decision that, they're not going to hang around in Guatemala for a project that is going into effectively closure, being Marlin, and 150,000 ounce producer, that the focus needs to be on big camps. And they made an acquisition of Kaminak here in Yukon for $520 million. The chairman and founder of that company, John Robbins, our chairman. And so he got to know the Goldcorp guys, and after they sold Kaminak, just opened up a line of communication, and they say the rest is history.
Okay, so but you're not do you think you're getting any value for that? You're 80 million market cap today, right? As I say, it's a recent thing, but are you getting any value for any of that Goldcorp investment?
Well, I think that when folks come down and take a look, they realize that you've got what looks like a mine. It doesn't have a process plant.
But that's folks. I'm talking about the market. What's the market giving you credit for? Is it your feasibility study? Is it answers in the ground? Is it all that data you've inherited? What is it?
Yeah. Well, I mean, that's a tough question, I think, in terms of what we're getting value for. I mean, when you look at it, I mean, ultimately, our job is to take what we've got and turn it into something that's generating cash flow.
Yeah.
Is 20% of the value associated with the sunk capital? I honestly can't tell you that, okay. But I can tell you that it provides a very clear picture when folks come down, and they have the perception and they see what's there. And case in point, that financing we did earlier this year, nobody was raising money. Everybody kind of scratched their head and said, Bluestone, $10 million bought deal, good luck. Yeah. 2 weeks later, it's $22 million. And so I think, proof really is demonstrated in terms of what we've been able to do in a short period of time. And I fully recognize we're a little bit like a salmon swimming upstream here, okay? But you watch, in 24 months, we're going to be on the verge of producing gold.
What are you going to do with all that money?
That's a Hollywood problem. Don't worry about that.
Well, I do. Is it coming back in? Is it coming back in dividends? Is it going to be stuck in the ground?
Well,
is anyone making money here?
Yeah, so from the perspective of where I sit, and my past experience when we were with OceanaGold, we were again a little bit like a salmon swimming upstream. Gold price goes down in 2013. The largest companies in our space were busy cutting capital, cutting dividends, shutting down offices. OceanaGold had just been successful on bringing on the Didipio project, made money. It didn't matter what the gold and copper price was. We were initiating a dividend. I like getting my dividend checks, quite frankly. But for our perspective, and I've had this question before from many of our investors in Europe in particular, what's going to happen with the cash flow, Darren? I said, well, look, first and foremost, we're going to borrow, and we're going to borrow to build this mine. So we need to pay back our debt holders, obviously. But you're darn right. I like the idea of dividends, and this asset will allow it for a huge opportunity to return capital to shareholders, to continue to invest and drive really growth in those 10 gram per 10 ounces, which effectively is what this deposit's about, and create other opportunities for us going forward. But first things first, let's focus on getting this financed. Let's focus on getting it executed and built, bringing it on, and then we'll start having those discussions in more robust fashion.
Absolutely, but I'm trying to give people a morsel of what is to come. You're painting a picture here with your numbers and the process and the stage you're at. People want to know what kind of board you've got. What are they doing? Okay, we've talked about dividend, fantastic, but are you going to use that money for growth, or is this a short window, make hay while the sun shines, and then we'll move on to the next thing?
Well, I think that we've got the team here. I mean, most of us have come from organizations that are larger companies, fast-growing sort of mid-tier companies, and we've kind of jumped in with both feet here. And some would look and say, well, geez, that's really risky. Well, I mean, this is an advanced asset that's a great asset that we're going to build. And so, we'd love to continue building a company and use this as a great platform. I mean, where else can you find a business that is going to generate more free cash flow in its first year of production than the market cap, right? So a great place to start. But we've also got plenty of bumps along the way that we got to get through. So no, I mean, my vision for the company is ultimately to get this up and get it going, and then use that cash flow to pay back our debt, and then start to look at things like returning capital to the shareholders. I'm a shareholder. We all love our dividend checks, and I think that it sends a very clear message to investors in the market on capital discipline, capital allocation. There's no reason why you shouldn't be able to initiate some sort of, even if it's a modest dividend, and then depending on how the company is doing on an annual basis, then issue a special dividend. That's what my experience in the past, and it's worked very well. Which
is fantastic, and that's the kind of, I understand you're looking at the next few hurdles, and you don't want to look out too far down the line. But again, it'd be just interesting to just get a sense of, you're going to build this business with this asset, single asset in this country. You're in Guatemala. But what could the future hold? Are you looking to build a mid-tier producer? With the current asset, you're not going to do that with, on average, 100,000 ounces, well, just slightly over 116,000 ounces a year. How do you make that bigger? Do you want to make it any bigger?
Sure. Well, without a doubt, a single asset companies inherently have additional risk, and I know that. I mean, that was one of the things that when I was with Oceana Gold, and we went through quite an aggressive space where we were acquiring assets and acquiring other companies that we brought to the table, right? And so the fact is that we're not making widgets. Quarter to quarter, things go up, things go down. Volatility is not something that typically most market participants like. And so, looking for opportunities where, we can potentially grow or merge or find like-minded sort of management teams to put together quality assets, then I think without a doubt. I'm not a huge advocate, I'd have to say, in terms of, diversifying for geopolitical risk per se. There's been more examples, I think, of that not working out well because you dilute the quality of the asset that you have so that you've got another jurisdiction that you have to deal with. At the end of the day, 80% of our job as managers is to manage risk. And what better way to manage risk than understand your business, understand the moving parts, and try and be proactive rather than reactive. So without a doubt, fully cognizant, single assets, you want to have other baskets of eggs spread around. But it's got to be the right baskets.
Right. And what is your board telling you they want to do? And what are your major investors, well, Lundin Family for a start, what are they telling you they want you to do? Look at the short term or look a little bit further out?
Yeah, I think it's more short to medium term right now. Again, because, go back to my analogy, we are a little bit like a salmon swimming upstream here. We got to get this financed. We got to, kick things off. And get the project going. And and we've talked a little bit earlier as well around the fact that we are in Guatemala and in a developing country. So the focus is more on the short to medium term. I think as we put these building blocks in place to get us to the next stage, to move into that construction development phase. But this will be a good discussion to have around the board meeting in 24 months if we're talking about dividends.
Yeah. Okay. Well. Okay. That's fine. Let's just finish off and talk about the geothermal component. $60 million spent on it. By who? Why? And what are you going to do with it?
Sure. So it was Goldcorp that did it. They put $60 million in. There's a lot of drilling and studies that have gone in, really using New Zealand experts. The Kiwis are some of the best in the world when it comes to geothermal. And the whole premise around that at the time was that the power grid was about 35 kilometers away. And we were in that period of time when oil was going to, $140, $150 a barrel. And there was still quite a significant component of power in Guatemala that was really related to carbon, coal, oil bunker fuel. Fast forward to where we are today, the grid's now within effectively 7 kilometers. The spot power rates in Guatemala are about 5 cents a kilowatt hour. There's been new hydro that's come on. Obviously, the oil prices come down as well, but the dependency on bunker fuel is fairly low. And they're actually Guatemala is exporting power both to Mexico and also to El Salvador. So from our perspective right now, we've kind of taken a plain vanilla approach. We will pull power off the grid. That's 7 or 8 kilometers. We'll string the lines. Obviously, very reasonable price power and one of the competitive advantages we have. But we did do some work last year using some experts in California on what's currently been identified from a geothermal perspective. And it would appear as though in the intermediate horizon, there's probably 5 to 10 megawatts of power that's already been defined. There's no plant there yet. And so it definitely creates an opportunity for us as we go forward. There's the potential here, to produce power and potentially be, the world's first zero carbon footprint gold mine. But
what's the reality? Is that a distraction?
Well, and that's the reason why we really, I think, carved them out here 18 months ago when we were kicking off the feasibility study, I guess 24 months ago. We just said, look, let's keep it plain vanilla. We've got enough things to worry about here. If power was 25 cents a kilowatt hour off the grid, this would be a different discussion. But it's a unique opportunity. There's definitely value there. We are getting inbound queries once every month, once every 2 months from different partners that are interested in partnering with us on it. But let's just see how things go here over the next few months.
Okay, Darren. I think that's a fair point. Darren, thanks very much for that story. It's a first introduction for all of our listeners, viewers, followers. Really enjoyed listening to it. I've been keen to talk to you for some time. Keep us up to date with how things move. I appreciate you going through this process of financing towards between now and the end of the year, but we'd love to keep up with the story.
Well, thanks very much for the opportunity. Great to be on, and you bet there's lots to happen. So maybe in a few months we can hop back on and have another discussion.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.